Hey guys, welcome back to the channel. I'm glad to have you here. I hope you're all having a really great week. I can't see any reason why you wouldn't be having a good week because everything is amazing. Everything is definitely fine, right? Let's go and take a look at the computer. Hey, come on. You're meant to move the camera this way. Over here. Let's just take a quick look at the market. Bear alert. Bear alert. Bear alert. Bear alert. Bear alert. Everything's fine. Alright people, so maybe it's not all amazing and maybe everything's not all right and everything's okay, but to be honest with you, I think most people are panicking way too much right now. Let's break it down. Today's video, we're going to be talking about Bitcoin. We're going to be talking about why I am not worried about this at all, even though things do look bearish right now for Bitcoin. I'm going to explain to you why it's looking bearish, what we can expect from the market, but also why I'm not worried about it whatsoever. So stay tuned to the very end of this video to find out my thoughts on what's going to happen in the market and where I think it's going next. If you could do me a massive favor though quickly first and just like, subscribe and of course share this video with your friends, that'd be really appreciated. YouTube are basically trying to suppress crypto content. They've been doing it for years and they're doing it even more now that Bitcoin is going so high. So I need you guys to go out there and spread the word about CryptoPig Live, let people know about us and my videos, and make sure that you're following us here, subscribe to us, and of course following us on Twitter at CryptoPig Media. Alright, so clearly Bitcoin isn't having a great week. Right now it is down at $54,300, but the point of this video isn't really to get all that hung up over the price. Although we are going to discuss the price, of course, we're going to look at the chart, but I think what you're more interested in is what's going to happen next. I want you guys to realize institutions are holding on to their Bitcoins. They are not letting go. This isn't your first radio, so you're probably not the ones dumping your Bitcoin right now, but if you are panic selling, look, you're just handing it to the institutions. So it's really important that you stick with me to the end of this video so that you can understand what's going on, why it's happening, and more importantly, what's going to be happening with Bitcoin's price from next week forward. But first, a warning. As you know, this is not financial advice. None of the stuff I say in this video is me advising you to buy or sell at any certain price. This is me talking about crypto from my perspective as a long-term trader and, of course, investor in the space. At the end of the day, these are my thoughts about what's going to happen in the market from what I've seen and what I understand about it. You should definitely do your own research before you make any decisions. And with that out of the way, let's get back to the video. So if you're looking on Twitter right now, it's quite clear that the noobs are completely panicking about what's going on. Let's be honest though, I don't really blame them. That's me, of course, and you guys watching as well. We were guilty of this back in 2017 and 2018. We did a lot of panicking ourselves. I know some of you have got diamond hands, but the rest of us are not, we're definitely not that tough back in 2017. Maybe we are now, I hope. But when we were started in this space and getting going with that last bull run, definitely some scary times. So I don't blame all the noobs for getting worried about it right now. Every other Twitter message is somebody getting really worried about Bitcoin and saying that the top is in. But like we've always said, you want to do what the smart money does. And the truth of it is that Bitcoin whales and institutions are not bothered by Bitcoin's correction right now in any way at all. And there's data to back that up. Sentiment tweeted out just today, Bitcoin has seen a modest 6.7% price drop in 24 hours. However, a promising factor our community is watching is the fact that Bitcoin supply had its largest daily move off of exchanges in 6 weeks. USDT supply, conversely, is at an all-time high. What does that mean? It means that the institutional investors are taking their Bitcoin off exchanges. They are not going to be selling at any time soon. They are taking them off the exchange and putting them into their wallets. The fact that USDT supply is high means that there are whales getting ready to buy up the dip. And as I said, we want to do what the smart money does. And if that wasn't enough data for you, well, don't worry, there's even more. Inflows into Grayscale's products this week have continued to surge. And last week, CoinShares themselves also announced that they'd received another $99 million worth of investment into their crypto products. And Grayscale have reported that they have a massive $44.2 billion worth of crypto under management right now. At the end of the day, the whales are locking up their Bitcoin and their crypto, and they are not looking to sell anytime soon, I can tell you that. So if that's the case, any correction that we are going to see will probably not be long-lived. It will be short to medium term at the most. And really, traditionally, March has always been a bit of a bearish month during any particular cycle that the market's been going through. If we look at the Fear and Greed Index, you can see that actually sentiment is still at 66 in the greed range. You can see that it is down from 91 last month, but it is still up there pretty high. We are not yet in that fear zone. And remember, greed is when you want to sell, fear is when you want to buy. Now, the fact that it's dropped down may be a bearish indicator. It might be that we're seeing people are starting to take profit, and that's what this little sort of rest, this correction that we're having. It's not really a big correction right now, but maybe that's what we've seen as we got stuck at that $60,000 resistance level. Why are we concerned about a short to medium term correction on Bitcoin? Well, of course, we are completely overextended in the price, and we have been for ages. But the key factor here is that on Friday, there's about $5.5 billion worth of options contracts that are set to expire. Unfortunately, the maximum pain price for those options happens to be $44,000, which does suggest that there could be a correction to the $40,000 range. Now, the only hopeful thing I can see from this is that if it is because of the options that we're seeing this kind of stagnation in the price and this kind of small correction that we've seen today, that we see the pullback over this week as we approach those options, and then once they expire, we see either some accumulation of Bitcoin or a bounce at that point. Now, the fact is that, yes, people are saying, that they're worried and, maybe now would be a good time to sell, people are thinking. However, I do want to caution you. We have got to keep in perspective that there are a lot of whales and institutions in the space now who may hold that price up. So any pullback may be very short-lived. And if the price ends up going any lower than that $44,000 sort of range, well, it's probably because of retail investors panicking rather than the big whales in the space. So we will quickly take a look at the chart now. And as you can see, when we look at it on the weekly, you can see here's our long-term support, and we are really extended way above that. You can see that between $57,000 and $61,500 is actually turned into a fairly strong level of resistance now. And you can see there that the stochastic RSI is definitely in oversold territory, but as I said, we're very overextended. Now, the one thing I really want you to consider is that in previous bull run cycles, we actually found ourselves testing the 20-week moving average on a regular basis. You can see here we haven't actually done that for months, not since October. And when you look back at 2017, we actually tested it several times, and those pullbacks were as much as 40%. If we pull back to the 20-week moving average now, that would actually nearly be that 40% pullback. And interestingly enough, look, it would almost line up with the estimated correction from those options that expire on Friday. Now, if you switch to the daily, you can see that the price is actually broken below that trending support line from before. So we'll just move to the 1 hour chart. And here we can actually see where those short-term bearish indicators are actually making sense. So we've got the bearish stochastic RSI. We've got bearish MACD. You can see it's below that zero line, and it's about to have what you call a bearish crossover. The price action itself is actually below our exponential moving averages. And look at that huge green volume there, where the price still gave way to the bears. So on the 1 hour, you can definitely see that it looks bearish in the short term. The good news there is that it's definitely more on that short term time frames that we're seeing that bearish sentiment. The signals on the longer time frame are not quite as bearish. So I do think that this pullback will be a quick short correction, probably then followed by some accumulation. Or if there's enough USDT coming into the exchanges, maybe we might even see a bit of a bounce following on from this weekend. I think our next level of resistance is going to be $57,000, but I really think we need to see the price get above $62,000 to validate the continuation of the bull run in the short to medium term. If we reach that previous support level, the problem there is that we could test it and end up getting rejected. But of course, first we do need to actually break through that $57,000 resistance level to make it happen. If we do fail here, then our next support is going to be $53,280. Below that will be $50K. But I do want to point out that this time it is very, very different. We've got all of those institutional investors in the space now, and they're not likely to let the price go much lower certainly not lower than the price they bought in at. The difference is, though, that the institutionals are not selling up. Now, I definitely think that it is possible that we might dump down to $50K and then maybe even as low as $44,000. It's definitely a possibility. But let's make it clear, as soon as those retail investors panic and sell, the institutions are going to be in there buying it all up. Really, I have to be hopeful. I'm going to hope that we bounce from this point now and that we actually go and breach that $62,000 level. If we can do that, I think that we're well back on track for the bull run and definitely on track for a $100,000 to $200,000 Bitcoin. And that bull run is going to be back at full pace. So I've decided I'm going to hodl on through this correction if we in fact have one. And I think I'm going to go where the smart money is going. At a very minimum, I think that if the Bitcoin options actually do affect the market on Friday, we'll probably see accumulation rather than some massive return to the bear trend and the bear cycle. I don't think that that's happening. And if we do see any accumulation for Bitcoin as a result of this, do you know what I'm going to be wanting to look at putting all my money into? Altcoins. Because if we do accumulate following the options on Friday, then I think we're going to see ourselves having a altcoin super cycle, which will begin probably Monday next week. So later this week, I'm going to be sharing some of those altcoins that I'll be grabbing up in preparation for the super cycle. So make sure that you do like this video, subscribe to the channel, of course, hit that notification bell so that when I put that video out, you will be updated and you'll be able to catch it just in time. I hope you really enjoyed the video, guys, and I will hopefully see you all in my next one. Bye!